Welcome to today's Explainer. We're jumping right into something absolutely crucial today, analyzing the ultimate blueprint for business survival. By the time we wrap up, you're going to see exactly why mastering business capital is literally the deciding factor between a company that thrives and one that just disappears.
To really understand the stakes here, I want you to picture this. Two identical startups. They launched on the exact same day with the exact same brilliant idea. Both hire incredibly talented teams, and both are selling a truly great market-ready product. On paper, they're twins. But fast forward just 5 years, and they face completely different fates. Company A is this massive global brand, while Company B has shut its doors forever. So, what actually made the difference?
Well, I can tell you right now it wasn't a better marketing campaign, and it definitely wasn't just luck. The secret differentiator is business finance, and it's way more than just a back-office department. It's the strategic way a company earns, spends, invests, and manages its money. It acts as the absolute backbone for every single decision. From hiring a new employee to launching a whole new product line, it all depends on this foundational planning.
So, let's dive into this blueprint. Today we're covering 5 key stages: the secret to survival, cash flow versus profit, funding business growth, managing expenses, and planning for the future.
Starting right off with Section 1, the secret to survival, and why it goes way beyond just great products.
We really need to start by busting a dangerous myth out there. You know, the idea that just having a killer product guarantees your survival. Actually, strong sales can often mask underlying structural weaknesses. If the finances aren't managed right, real growth becomes incredibly difficult. You could be selling products faster than you can make them, but sales do not equal survival if that money isn't channeled correctly.
Which leads us to Section 2, cash flow versus profit, survival versus paper.
Now this brings us to a really dangerous paradigm shift. A lot of seasoned pros think profit is the only metric you need to look at, but confusing profit with cash flow, that is a fatal trap. A company can look highly profitable on paper, like maybe they just signed massive contracts for next year, but still go bankrupt today if their actual cash flow is dangerously low. You just can't pay today's bills with tomorrow's potential profit. Because here's the reality of it. Businesses survive strictly on cash flow to handle immediate, day-to-day needs. It takes actual cash on hand to pay your team, to pay the suppliers, and to just keep the lights on. Profit is a theory. Cash flow is a reality. And that's exactly why successful companies are monitoring their cash flow every single day.
Moving on to Section 3, funding business growth, getting that capital for expansion. So when a business survives those crazy early days, it eventually needs capital to expand. It needs fuel for the engine, right? There are basically 4 main ways to get this fuel: reinvesting profits, business loans, investors, or crowdfunding. And each one of these comes with its own unique trade-offs. Reinvesting profits is super safe, but kind of slow. Loans give you quick cash, but then you've got debt. Investors bring big money to the table, but it'll cost you equity and control. And we need to be really careful here. Choosing the wrong financial fuel for your specific situation can actually choke the engine instead of speeding you up. For example, taking on heavy loan payments before your revenue is actually stable, that's going to drastically increase your financial pressure and completely stall your momentum.
All right, Section 4, managing expenses. This is all about spending smarter.
Getting money in the door is only half the battle. What you do with it once it's inside is what truly separates the global brands from the bankruptcies. Growing your revenue is fantastic, obviously, but tracking major costs and controlling expenses is equally as important. You simply cannot out-earn bad spending habits. Successful businesses don't just spend more money as they grow, they meticulously track every major cost and ruthlessly control their expenses.
Instead of just spending more, they spend smarter by focusing on 4 specific areas. They put their capital into technology, employee training, research and development, and creating better customer experiences. Notice a pattern here? Doing this means you have to willingly reduce your short-term profits, but smart companies make that trade-off every single time, because these are the exact investments that generate massive long-term value.
And that brings us to Section 5, planning for the future.
Once you've got a handle on cash flow, funding, and spending, you need an ironclad roadmap. Strong companies map out tomorrow using 4 essential steps. Step 1, budgeting, knowing exactly where every dollar is going. Step 2, forecasting future income so you know what's coming down the pipeline. Step 3, preparing for unexpected expenses, because emergencies are a guarantee in business. and step 4, setting clear financial goals. This whole sequence ensures you're making calm, smart decisions, both in the good times and, more importantly, when things get tough. So, to bring this all together, business finance isn't just a bunch of intimidating numbers on a spreadsheet. Ultimately, it's about making the smartest possible decisions with the limited resources you have. That is how you build a stronger company. The businesses that actually take the time to understand their money don't just survive the startup phase. They're the ones that grow, innovate, and create lasting value.
Which leads us with this final, kind of provocative thought. Look at your own ventures or the company you work for and ask yourself, are your financial decisions building a lasting business or are they just funding a temporary job? Really think about that. The smarter your financial decisions, the stronger your business becomes. If you found this explainer helpful, make sure to subscribe for more insights on entrepreneurship and mastering business finance. Keep learning, keep focusing, and I'll catch you in the next one.